Over last 12 months, positive trajectory of price movement reflecting substantial improvement in revenue and EBITDA of DRREDDY'S. DRREDDY'S, a major player in the pharmaceutical industry with market capitalization of over rupees 73,000 crores, having concentration of its manufacturing facilities within India, in addition to facilities created in UK, US and Mexico. In terms of share in earnings before interest and tax on a trailing 12 months basis, in calendar year 2019, 89.5% belongs to generic. In the subsequent year, there was a marginal fall regained in 2021, and in 2022, the share of global generic has been phenomenally high at 95.4%, leaving hardly anything to the other two segments, pharmaceutical services and active ingredients and others. Three segments, but dominance by global generics dealing in branded and unbranded prescription medicine as well as OTC. Distant second, pharmaceutical services and active ingredients. On a trailing 12 months basis, key performance indicators, revenue, 3-year CAGR of 12%. For 2 years, the growth rate is 13%, and annual growth over last 12 months, 14% growth in an ascending order for revenue. Profit after tax has grown with a 3-year CAGR of 29%. For 2 years, growth at 29% again, and last 12 months growth is phenomenally high at 38%. And the PAT percentage has also improved from 9.9% 3 years ago to 15.3%, even after absorbing substantial amount of impairment loss, input inflation, increase in R&D expenses and marketing charges. Company enjoys a strong EBITDA percentage as the margin has moved from 14% to 22.1% over 3 years. Reason, strong product mix, which has enriched and made EBITDA quite robust. A look at the quarterly distribution of revenue over geography, starting with the September 21 quarter, followed by December 2021, March 22, June 22, September, and the recently concluded December 2022. North America contributes almost 45%. Indian share during the period has fallen as compared to earlier quarters. Emerging markets has also fallen. It includes Russia, which has got a share of around 10%. European share remains at a lower level of 6% plus of the total revenue. PS and AI contributes around 11%. Diversified spread insulates the company from geographical risk. DRREDDY'S cash flow is quite solid. Operational cash flow growing year after year takes care of increase in working capital requirements, leaves behind a big chunk of operational surplus, which is far in excess of fixed assets investment every year. The relationship between operational surplus and fixed assets continues year after year with the sheer dominance of operational surplus and less dependence on external funds. Strong operational surplus. Also evident is consistent increase in net worth along with the increase in total assets of the company. As a result, funding from equity has gone up, moving from 62% in 2019 to 66% in 2021 to a peak of 71% in the recently completed half year of September 2022. The company has strong operational surplus and lower dependence on debt because of the growing net worth. DRREDDY'S has a growing mix of equity and debt over last 6 years, supported by earnings before interest and tax, resulting in a return on capital employed percent quite rewarding. During the last 6 years, equity and debt grown at a 6-year CAGR of around 8%, while the earnings before interest and tax has registered a growth of almost 21% during the same period. As a result, ROCE has moved from 9.4 to 12.4 to a peak of 24.2% in September 2022. Quite impressive, as reflected in the growing return on capital employed. Dr. Reddy's market capitalization is currently around rupees 73,000 crores. Its profit after tax has remained quite impressive. As a result, the PE multiple is also in a zone quite attractive in the company of PE median, although it is at a disadvantage as compared to the profit growth rate. The current PE of 20.3 has its merit in being less than PE median value. It has got a negative being above the PE growth rate of 13%, but it is better than peers PE of 27 times and the industry PE of 23 times. Shareholding pattern over last 5 quarters, starting from December 2021 up until December 2022. During these 12 months, interestingly, there has been a fall in the holding of mutual funds, FPIs and overseas depositories, although marginally. But worth noting is while the promoters' holding has remained at 26.7%, the holding of FPI and overseas depositories is far in excess of that at 37%, suggesting faith in the future prospects of the company. Dr. Reddy's has strategized to focus on core brands to build a healthy pipeline of complex products. It is looking into proposals of capital allocation for growth organically and inorganically. The strategy has also been implemented in terms of non-core brands by way of multiple divestment decisions. On the whole, the company is able to consolidate its core brands. The movement of daily share prices of Dr. Reddy's over a period of 12 months from March 2022 to March 2023 suggests an upward trajectory within a range, with bottoms making higher highs. And with a closer look alongside the Bollinger Band, the ascending channel reinforces the price movement in the near term, taking the ascending support. The placement of current market price after crossing 20 EMA with the support of volume is quite positive, as the price is above 20 EMA and 200 EMA, and it also has the support of price action data, which suggests increase in price, increase in quantity, increase in order size, and also increase in delivery percentage, which is a combination of multiple positives. The company's alleged improper payment in violation of US law in Ukraine, as highlighted by the whistleblower, is pending for settlement, and that is a risk. And as regards option chain for the current month, there is high probability of bearishness expected in the price movement. Major pharmaceutical player, robust EBITDA generation, strong geographical spread, hefty operational surplus, impressive return on capital employed, weakness of over-dependence on global generics, foreign holding in excess of promoter holding, and unresolved Ukraine improper payments. Hope you found this video interesting and useful. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.